Chapter 2, we get started into computing wages, just figuring out the gross income and the overtime and the hourly rates and things like that. So the first slide just defines an employer versus an employee. So that seems fairly obvious. You know, obviously if you work at a company and you're getting a paycheck from them, the company is the employer and you are the employee. Where it gets a little bit more into gray area is, say you have a nanny in your house. Are you an employer and is she an employee? The tax laws would say yes, you know, yes, you are the employee and she's the employee. Or sometimes businesses will have people that they consider self-employed independent contractors, and then sometimes that becomes questionable to say, well, are you really controlling them? Are they working anywhere else? Are they marketing their services to other businesses? Are you providing them the tools, that kind of thing? Because then that can cross over to say, well, really they probably are employees. Statutory non-employees are going to be direct sellers or like real estate agents, because they may work for an agency, but they're still considered self-employed. Because all they get is a commission on the sales. So they could have no money come in that month, or they could sell 3 houses and have a ton of money. But the agency doesn't really employ them, and they are not treated as employees. So then this gets into, again, like what I said, okay, maybe you have a nanny, or again, a gardener, or if you're very wealthy, you have a chauffeur. So the key to that is then you probably are an employee. They say that they have to at least earn $2,100 a calendar year to be considered an employee. If they live in, like say you have a live-in nanny, which again, probably most average people do not, but I'm sure like our movie stars and our congressmen maybe do, they would not be paid overtime because obviously they live there. They're there 24 hours a day, so that would be ridiculous to pay them overtime. If they are people who come to your house to say care for an elderly parent or a disabled person, they would be paid overtime if they're employed by a third party. Again, if they're living with you, like a live-in domestic, then it would go back to that category. So what is minimum wage? The minimum wage, at least at the time that the textbook was published, was $7.25 an hour, and that covers a variety of different things. You can kind of see the listing there. I mean, I think the most common is obviously just your wages that you're paid, but it could get into commissions, severance pays, bonuses, differential pay. Like if you work at a factory or a hospital, sometimes they'll pay you more if you work the midnight shift or the afternoon shift. But that's all going to calculate into that minimum wage amount. If they provide cost of your housing and your meals and your transportations, again, if it's for your benefit and you accept it, that can be counted as your wages as well. The discretionary bonus is one which is not agreed upon or promised beforehand. So like sometimes employers will say, you know, when they get to the end of the year, hey, we've had a great year of sales, and we'll give everybody a certain bonus amount. With, you know, different companies that I have worked for have done that, so that you're not expecting it, you don't know what it's going to be. It all depends on their profitability. Then it gets into, again, some kind of unique little scenarios that would not be part of the regular wage. So if they give you some sort of a gift card or reward for your services, if it's a profit sharing plan, if you're getting vacation pay, holiday pay, sick pay, if they give you allowances for tools that you purchase but then use on the job, or sometimes salespeople will use their own vehicles instead of using a company vehicle, and they'll give you an allowance for that. Those would not be considered your regular rate of pay. Then the living wage is different than a minimum wage because some cities, the cost of living is so high. So to pay those people $7.25, they would really be below the poverty level in that city due to their cost of living. So then they're going to require them to pay a higher rate of pay in those 100+ cities that have that high cost of living. This is also very common, tipped employees. So you figure all of our waitresses are tipped the busing staff or the kitchen staff could be considered tipped as well. If you are you're parking people's car, a valet, you would be tipped. So there's a variety of different jobs that has to be calculated into their wages. So the companies will pay them a minimum of $2.15 an hour, but they have to guarantee that that person is at least making the minimum wage. So then that means that they would have to factor in that they at least have to be paid that $5.12 differential if they need to. So like it shows you some examples of down below, if they were paid their 40 hours at that minimum tip wage, and then they received so much in tip, does the employer need to pay them anything additional, or does the employer not? So then the first example, they do pay additional. The second example, they've got a ton of tips. No, they don't have to pay anything extra. Then overtime is set to be 1.5 times the regular pay. Now, how I normally do it is kind of like in a straight line computation. So if say a person works 50 hours, I'm going to say, okay, they're 40 hours, they get paid at their regular rate. Those 10 hours of overtime, I take the 10 hours of overtime times their regular rate times 1.5, because that 1.5 is time and a half, and then that'll give me their overtime pay. You could also calculate a separate overtime rate and multiply that by those overtime hours. That would be fine as well. There are some exceptions to it. If you're a hospital employee, many times those people work 12-hour shifts, and then they rotate days, so it's in a bi-weekly period. So maybe one week you work 4 12-hour days, and the next week you work 3 12-hour days, so that in that time frame you're maybe not going over the 80 hours, or just maybe a couple hours over the 80 hours. But they're not saying, okay, you're going to get overtime for every day that you work over 8 hours. So there can be, and then some factories could possibly be that way as well. Normally factories do work 8-hour shifts. There's a first shift, a second shift, and a third shift, but they could have some of that scenario also. Excuse me. Then there can be comp time. So comp time is common to say, we're not going to pay you overtime, but we'll keep track of your hours that you worked over 40, and then you get to take that time off at some point in time in the future. So like public accounting does that a lot. Like say you're an auditor or a tax accountant, during busy tax season you might work 50, 60 hours a week. But what they'll do is they'll let you bank that 10 to 20 hours, and then you can take it time off in the summer. So then in the summer you might be only working 2 weeks a month, which is nice. I mean, people like that. So that's common in certain industries to have that comp time. Exempt versus non-exempt employees. So exempt is people who they give you a list, and then if you go through the notes, it'll give you more details about each one of those. But if you're like an executive manager, an administrator, like an accounting professional, so as an accounting manager, I never got paid overtime. Obviously, if you're a business owner, a highly compensated employee, think of our baseball players and people like that, they're not getting paid overtime. Computer professionals, creative professionals, and outside salespeople. So they have to at least be paid $455 a week and be paid on a salary. So they're not punching a time clock, they're not paid hourly. Then in those cases, you don't get paid overtime. So all of my jobs since I've gotten out of college have all been salaried. So then there could be like a week a month that I work 50 hours, but I'm not going to get paid that overtime. The assumption is my salary was set to compensate me for that. Now, if I was having to do that every week, I might question that a little bit more, but 1 week a month for closing or something, it's kind of expected. Now, blue-collar workers are always entitled to overtime pay. So police officers, emergency medical people, firefighters, paramedics, nurses, they're all entitled to overtime pay. So even like it adds, even if they put you on salary, that doesn't make you you still should get paid overtime. The Equal Pay Act, again, is going through the laws. So going back to our Federal Labor Standards Act to say that men and women need equal pay for equal jobs. they need to have those minimum pay requirements and minimum wage standards set up. They cannot discriminate, based on sex or religion or anything like that. The only differentials they are allowed is it mentioned, like a seniority system or a merit system, but it cannot be based on any type of discriminatory, like race or sex or anything like that. So again, just talking more about the laws. Then we get into child labor laws. So again, that the FLSA sets forth different requirements for children under the age of 18. So if they're between 16 and 17 years old, they can work unlimited hours each week in a non-hazardous job. So probably no real factories, coal mines, anything real dangerous. I feel like even some construction jobs are dangerous. 14 and 15-year-olds would be limited to working in a retail restaurant or a gas station type job, and they would have limited hours that they can work. Then it gets into some even lower ages, which to me is kind of crazy, but I guess it could happen. So if you're under the age of 12, you cannot even work in a farm job. Kids 10 to 11 could work as hand harvest laborers outside their school hours. I mean, to me, again, crazy that children at that age are working, but I guess maybe in some cultures they do. So yeah, the employer has to obviously have a certificate of age, and any violation of these child labor laws would be punished with fines. So how does the employer determine the employee's time? Obviously they could clock in and clock out with a time card. There's a lot of electronic ways now that people can scan. They can have like a little badge that they scan and it goes right in. So that can be more advanced. Or it could even just be a log that the employee keeps in Excel or something like that. Then it gets into some unique scenarios, like, okay, what if I work in a job where I have to change in and out of my clothes? What if I'm a sales rep and I'm traveling to and from different places? What if I'm working on a factory job and my plant or my piece of equipment goes down and I just am standing there for an hour? So those are things that, yes, they need to pay you for, because it's part of your day, it's part of your expected work routine. So those would be paid. Also, most employers allow a 15 to 20 minute break. Especially if you're like a factory worker, you need to be able to leave that piece of equipment to go to the bathroom, to get something to drink. Do you know what I mean? So normally employers will allow for that, and that is still paid. If you clock out for lunch, then you're not getting paid for your lunch, unless again you're expected to work on your lunch, but most places make you clock out. Then it talks about sleep time. Like, say you're a firefighter, and those firefighters are like so many days on, so many days off, and they do have to sleep in that time frame. So if that's part of your job, that would be included. Or sometimes doctors will be that same way. And I think those are the most common. Obviously, sick absences, or if you're late for work, they do not have to pay you for that unless it's part of their policy to do so. And so I already kind of talked about the mechanisms for keeping it, timesheets, time cards. Again, now everything is so computerized, there's all kinds of different ways that the computer can generate that, and that's probably going to continue as time goes on. When we actually compute it, you want to know these different types of pay periods. So we had this like in business analysis with algebra, where you are given an annual salary, and if you want to say, okay, if I'm paid weekly, what is that? You're going to divide it by 52 weeks. If I'm paid bi-weekly, divide it by 26 weeks. If I'm paid twice a month, which would be semi-monthly, I'm going to divide it by 24. If I'm paid monthly, I'm going to divide it by 12. There can be instances, what I have off to the side, if you're a salaried worker, so say you're a salaried police officer, but you do get paid for overtime, then you're going to take that annual salary, divide it by 52 to get to a weekly salary, and then divide it by 40 to get to what that hourly rate is, so that you can determine their overtime pay. So then here's some examples on that overtime pay, how we calculate it. But basically anything over the 40 hours is going to be overtime, and that's going to be at time and a half. So you can calculate their regular rate by taking that times 1.5 to get to an overtime rate, then multiply that by their overtime hours, or do it all in one step. Say, okay, I'm going to take their overtime hours times their regular rate times 1.5. Then this gives you like, well, what if they get paid differently? Again, could be a sales job or a manufacturing job where each job that they work on has a different rate of pay. So then that gives you some examples of how to compute that. I feel like it's not that common, but in the manufacturing environment, maybe it could be. So you can look over those different methods to see how that's done. Also in manufacturing, like I worked at the plastic injection molder, and we had an assembly line, and we paid our regular assembly line workers an hourly rate, but we had some independent contractors who we just paid a piece rate, because they could do it at their own time. They could do it when they wanted to. Sometimes they could even take the pieces home and do them.